Question 1. Cyber insurance coverage. Which of the following statements is true regarding first-party cyber insurance coverage? A. It covers legal costs and liabilities arising from lawsuits filed by third parties due to a data breach. B. It includes compensation for the business interruption and downtime caused by a cyber attack. C. It provides coverage for the regulatory fines imposed on an organization following a data breach. D. It covers damages resulting from intellectual property infringement related to cyber risks. Answer. B. Explanation. First-party cyber insurance covers the insured's own losses directly resulting from a cyber incident. This includes business interruption and downtime, which are common consequences of cyber attacks such as ransomware or other malware. Option A pertains to third-party coverage, which addresses liabilities arising from lawsuits filed by others. Option C is also related to third-party coverage, as it addresses regulatory fines and penalties that are typically the result of claims by regulatory bodies. Option D refers to intellectual property issues, which fall under third-party coverage, not first-party coverage. Question 2. Scenario-based question. Mr. Thomas, the cybersecurity officer at a mid-sized healthcare company, has just discovered that sensitive patient data was accessed by an unauthorized party during a ransomware attack. The company has cyber insurance coverage. What should Mr. Thomas do first to ensure proper claim handling? A. Immediately notify the insurance company without gathering any information, as the incident is urgent. B. Conduct a thorough internal investigation and then notify the insurance company after assessing the damage. C. Notify the insurance company and then immediately implement an incident response plan to mitigate damage. D. Wait for the IT team to fix the breach before notifying the insurance company to avoid possible confusion. Answer. C. Explanation. In this scenario, Mr. Thomas must notify the insurance company promptly, as many policies require timely reporting of cyber incidents to ensure proper coverage. Option C is correct because it emphasizes both notifying the insurer and implementing an incident response plan, which is a key part of mitigating the damage. An IRP outlines the immediate steps to contain the incident, while notifying the insurer ensures the claim is processed according to the policy's reporting timeframes. Option A is incorrect because immediate notification should not bypass an internal investigation to assess the damage. Option B is incorrect because an immediate response is necessary not after thorough investigation. Option D is wrong, as delaying notification could result in denial of coverage or complications with the claim. Question 3. Cyber insurance underwriting. When underwriting a cyber insurance policy, which of the following factors is most critical in determining the premium amount? A. The financial stability of the company purchasing the policy. B. The strength and maturity of the company's cybersecurity controls and measures. C. The company's historical profit margins over the past 5 years. D. The number of employees working at the company's head office. Correct answer. B. Explanation. When underwriting a cyber insurance policy, the maturity and effectiveness of the company's cybersecurity controls play a critical role in determining the premium. A well-established cybersecurity program includes regular assessments, incident response plans, employee training, and robust defenses against common cyber threats reduces the risk exposure and, consequently, the premium. Option A, while relevant in general underwriting, is not as significant for cyber risk exposure as cybersecurity practices. Option C, focusing on financial profit, does not directly correlate with cyber risk. Option D is also relevant, as the number of employees at the head office does not directly impact the organization's overall cyber risk profile. Question 4. Cyber insurance fundamentals. Which of the following is a key reason why cyber insurance has become increasingly important for businesses? A. Cyber insurance provides a way to eliminate all cybersecurity risks completely. B. It can cover costs associated with responding to cyber incidents, such as ransomware attacks and data breaches. C. Cyber insurance is primarily focused on covering physical damage to hardware devices. D. It automatically ensures compliance with all global data privacy laws. Answer. B. Explanation. Cyber insurance is essential for covering the financial costs associated with cyber incidents such as ransomware attacks, data breaches, and business interruption. Option B is correct because it focuses on the coverage provided for direct losses resulting from cyber incidents. Option A is incorrect because cyber insurance cannot completely eliminate cybersecurity risks, it only mitigates the financial impact. Option C is incorrect because cyber insurance generally covers intangible assets like data, not physical hardware damage. Option D is incorrect, as cyber insurance does not automatically ensure compliance with data privacy laws, or compliance requires active efforts from the organization. Question 5. Cybersecurity and risk management. Which of the following is the best description of the principle of confidentiality in cybersecurity? A. Ensuring that information is accessible when needed by authorized individuals only. B. Ensuring that data is accurate and consistent over time. C. Ensuring that data is kept secret and is accessible only to authorized users. D. Ensuring that data can be recovered quickly in the event of a cyber attack. Answer. C. Explanation. Confidentiality in cybersecurity refers to keeping data secret and ensuring that it is accessible only to authorized individuals. Option C is correct because confidentiality is about limiting access to sensitive information to those who have explicit permission. Option A refers to the principle of availability, which ensures that information is accessible when needed. Option B describes integrity, which ensures that data is accurate and remains unchanged unless authorized. Option D describes the principle of recovery, which is related to business continuity and disaster recovery. Question 6. Regulations and legal compliance. Which of the following best describes the implications of the General Data Protection Regulation (GDPR) for businesses operating in the European Union? A. GDPR imposes fines for failing to implement cybersecurity measures but does not apply to organizations outside the EU. B. GDPR requires organizations to notify individuals of a data breach within 72 hours and provides specific rights to data subjects. C. GDPR only applies to companies that deal directly with consumer data and excludes business-to-business interactions. D. GDPR applies only to businesses with over 1,000 employees and does not affect smaller companies. Answer. B. Explanation. Under the GDPR, businesses must notify affected individuals within 72 hours of discovering a data breach, and the regulation grants specific rights to individuals regarding their data, such as the right to access and delete the data. Option B is correct because it correctly outlines these requirements. Option A is incorrect because GDPR applies to businesses outside the EU if they process the data of EU residents. Option C is incorrect because GDPR applies to any business that processes personal data, not just those interacting with consumers directly. Option D is incorrect because GDPR applies to businesses of all sizes as long as they process personal data. Question 7. Types of cyber insurance coverage. Which of the following types of coverage would most likely be included under third-party cyber insurance? A. Reimbursement for the loss of data due to a cyber attack. B. Costs associated with a business's own system recovery after a breach. C. Legal defense and damages resulting from a data breach that affects customers. D. Compensation for lost revenue due to system downtime. Answer. C. Explanation. Third-party cyber insurance typically covers liability for damages caused to others. This includes legal defense and damages arising from a data breach that affects customers. Option C. First-party coverage, on the other hand, would cover direct losses, such as the loss of data or system recovery. Options and B, as well as compensation for lost revenue. Option D. These are all related to the insured entity's own losses, not liabilities to third parties. Question 8. Cyber insurance underwriting. When evaluating the risk of a potential policyholder, which of the following is most critical to assess for underwriting cyber insurance? A. The company's global market share and profitability over the past 5 years. B. The maturity and effectiveness of the company's cybersecurity practices and controls. C. The company's past legal disputes or settlement history. D. The physical security measures in place at the company's office locations. Answer. B. Explanation. The maturity and effectiveness of a company's cybersecurity practices and controls are critical for assessing cyber risk. Strong cybersecurity measures e.g., firewalls, encryption, training, incident response plans lower the likelihood of an incident, making the company a less risky prospect for insurers. Option B is correct because underwriting cyber insurance heavily depends on understanding how well an organization is prepared to prevent and respond to cyber incidents. Option A, while important for general business risk evaluation, is not as relevant to cyber risk assessment. Option C is more about liability and reputation rather than cyber risk specifically. Option D pertains to physical security, which is important but not as directly related to cyber insurance underwriting. Question 9. Claims and loss control. Which of the following is the primary purpose of a cyber insurance claims reporting timeframe? A. To ensure that the insurer has enough time to conduct a thorough investigation. B. To prevent the insured from losing access to their own data during a breach. C. To guarantee that the insured has enough time to negotiate with the attacker. D. To allow the insured to delay notification and limit potential negative publicity. Answer A. Explanation. The claims reporting timeframe is in place to ensure that the insurer can assess and investigate the cyber incident while it is still fresh, thus helping to prevent delays in the claims process. Option A is correct because timely reporting helps insurers to evaluate the situation and provide coverage in a prompt and efficient manner. Option B is incorrect because reporting timeframes are not related to data access but to timely notification of the incident. Option C is incorrect because the reporting time frame is designed to prevent delays, not to provide time for negotiations with attackers. Option D is incorrect because delayed reporting can result in claim denials, not limited negative publicity. Question 10. Market trends and emerging risks. Which of the following is a significant emerging risk in the cyber insurance market related to the increasing use of Internet of Things devices? A. The increasing frequency of ransomware attacks targeting physical devices rather than data. B. The potential for cyber attacks to be initiated by unsecured or poorly protected devices. C. The reduction of coverage limits for businesses involved in the industry. D. The increased likelihood of policyholders being overinsured due to technology. Answer B. Explanation. Devices often have vulnerabilities that can be exploited by cyber criminals, making them an emerging risk in the cyber insurance market. The growing interconnectivity of devices increases the potential for cyber attacks that can originate from insecure devices. Option B is correct because it directly addresses this growing risk. Option A is incorrect because ransomware typically targets data and systems, not physical devices. Option C is incorrect as adoption is driving the need for more robust coverage, not the reduction of coverage limits. Option D is incorrect because related risks are more likely to increase the need for coverage rather than lead to overinsurance. Question 11. Risk mitigation and cyber insurance. Which of the following strategies is most effective in reducing a company's cyber insurance premiums? A. Ensuring that the company has a comprehensive disaster recovery plan and regularly tests its incident response procedures. B. Increasing the deductible on the cyber insurance policy to reduce premium costs. C. Relying solely on the insurance policy to handle all cyber risk-related losses. D. Avoiding any use of cloud storage or third-party service providers to eliminate exposure to risks. Answer A. Explanation. One of the most effective ways to reduce cyber insurance premiums is by demonstrating proactive risk mitigation strategies, having a comprehensive disaster recovery plan, and regularly testing incident response procedures. Option A shows insurers that the company is well prepared to prevent or respond to cyber incidents, reducing risk exposure. Option B is correct in some cases, but can increase the financial burden on the company if a claim occurs. Option C is incorrect because relying solely on insurance without active risk management could increase premiums. Option D is not practical because avoiding cloud storage or third-party services may limit the company's operational capabilities without effectively mitigating cyber risks. Question 12. Cybersecurity coverage gaps. Which of the following scenarios is likely to be excluded from a standard cyber insurance policy? A. A business loses access to its systems due to a ransomware attack. B. A company faces a lawsuit for failing to protect customer data following a data breach. C. A company experiences financial losses due to employee negligence leading to an unintentional data leak. D. A business loses revenue due to downtime caused by a hardware failure and related to a cyber attack. Answer D. Explanation. Cyber insurance primarily covers risks related to cyber incidents such as data breaches, ransomware, and cyber attacks. Option D, which describes a hardware failure unrelated to a cyber attack, is typically excluded from most cyber insurance policies. Option A, B, and C are all scenarios that would likely be covered under a cyber insurance policy as they involve direct consequences of cyber incidents or data breaches. Question 13. Emerging cyber risks. Which of the following emerging cyber risks poses a significant challenge for businesses in the context of cyber insurance? A. The increasing use of virtual currencies and blockchain technology in financial transactions. B. The growing reliance on traditional antivirus software to protect systems from cyber threats. C. The rise of insider threats, particularly from employees with access to sensitive information. D. The adoption of industry-standard encryption methods for securing communications. Answer: C. Explanation. The rise of insider threats, including employees or contractors who misuse their access to sensitive information, is a significant and challenging emerging risk in the context of cyber insurance. Option C is correct because insider threats often result in breaches that are more difficult to detect and prevent. Option A may be an emerging risk, but blockchain and virtual currencies are not inherently risky to all businesses. Option B is outdated as traditional antivirus software is not sufficient to counter modern cyber threats. Option D, the use of encryption is a good security practice that mitigates rather than increases risk. Question 14. Third-party risk exposure. Which of the following third-party exposures is commonly covered under cyber insurance policies? A. Breaches caused by external vendors who have access to the company's network. B. Loss of physical data storage devices due to theft from a third-party warehouse. C. Cyber attacks that originate from a company's internal network. D. Legal costs associated with a company's failure to meet environmental regulations. Answer A. Explanation. Third-party exposures such as breaches caused by external vendors or partners with access to the company's network are often covered by cyber insurance policies. Option A is correct because these types of risks where external entities cause harm fall under third-party liability coverage. Option B, although involving third-party involvement, pertains to physical theft and would likely fall under property insurance, not cyber insurance. Option C concerns internal breaches, which may be covered under first-party insurance but not third-party coverage. Option D is unrelated to cyber insurance and pertains to regulatory compliance in other areas. Question 15. Cyber insurance claim process. In the event of a cyber incident, which of the following is typically the first step in the cyber insurance claims process? A. Immediately paying for recovery and restoration costs out of pocket before submitting a claim. B. Contacting the insurance provider to notify them of the incident and start the claims process. C. Assessing the financial impact of the breach before reporting it to the insurer. D. Immediately engaging in negotiations with the cyber attackers to resolve the situation. Answer: B. Explanation. The first step in the claims process for a cyber insurance policy is notifying the insurer of the incident. Option B. This allows the insurer to assess the situation and provide guidance on how to proceed with handling the claim. Option A is incorrect because paying out of pocket before involving the insurer may complicate the claim process. Option C is incorrect because it's essential to notify the insurer first, as they will help guide the financial assessments. Option D is incorrect because negotiating with cyber attackers is not part of the standard claims process and could lead to further complications. Question 16. Privacy breach and notification. Which of the following is a key requirement of many data privacy laws, such as DDR, in the event of a personal data breach? A. The company must pay for the affected individual's legal fees associated with the breach. B. The company must notify affected individuals within a specified time frame, often 72 hours. C. The company is required to delete all data from its systems immediately after the breach occurs. D. The company must offer free cybersecurity protection services to the affected individuals. Answer: B. Explanation. Under data privacy laws like GDPR, one of the key requirements is to notify affected individuals within a specific time frame, typically 72 hours, of a breach involving personal data. Option B is correct because it aligns with this legal requirement. Option A is incorrect because while there may be legal consequences, the company is generally not required to cover individual legal fees. Option C is incorrect because data deletion is not typically required immediately after a breach, although some laws may require deletion in specific circumstances. Option D is not a standard requirement under data privacy laws, although companies may offer such services voluntarily. Question 17. Policy exclusions in cyber insurance. Which of the following is most likely to be excluded under a standard cyber insurance policy? A. Losses from a cyber attack that exploits a known vulnerability the company failed to patch. B. Costs of responding to a social engineering attack, such as phishing. C. Damages resulting from a ransomware attack that affects critical systems. D. Legal fees for defending against a lawsuit arising from the breach of customer data. Answer A. Explanation. Cyber insurance typically excludes coverage for losses that arise from a known vulnerability that the company has failed to address, such as not patching known software vulnerabilities. This exclusion, option A, is common to encourage businesses to maintain up-to-date cybersecurity practices. Option B, C, and D are typically covered as they relate to recognized cyber incidents and the response costs or legal fees associated with them. Question 18. Business interruption coverage. Which of the following best describes business interruption coverage under a cyber insurance policy? A. Coverage for losses in revenue resulting from a natural disaster such as a flood. B. Coverage for lost profits when systems are temporarily shut down due to a cyber attack. C. Coverage for physical damage to hardware from cyber attacks. D. Coverage for lost intellectual property following a cyber breach. Answer B. Explanation. Business interruption coverage under a cyber insurance policy typically covers the lost profits or revenue that result when systems are shut down or disrupted due to a cyber attack. Option B is correct because it directly addresses how cyber incidents can lead to downtime and revenue losses. Option A is incorrect because natural disasters are covered by other types of insurance, such as property or business interruption insurance for physical losses. Option C is incorrect because hardware damage is generally covered under a property insurance policy, not cyber insurance. Option D is incorrect as intellectual property loss would be covered under different policies or intellectual property insurance. Question 19. Vendor risk management and cyber insurance. Which of the following actions can a company take to reduce its exposure to third-party risks in cyber insurance? A. Relying exclusively on vendors with the lowest cost of services. B. Carefully vetting vendors' cybersecurity practices and ensuring they meet certain standards. C. Ignoring vendors' cybersecurity practices as long as they offer legal indemnification for breaches. D. Avoiding the use of any third-party services to eliminate external risks. Answer B. Explanation. To reduce exposure to third-party risks, it is essential to carefully vet vendors and ensure their cybersecurity practices meet specific standards. Option B is correct because it emphasizes the importance of securing the supply chain and third-party relationships. Option A is incorrect because cost-cutting without considering cybersecurity practices increases risk. Option C is incorrect because relying on legal indemnification does not eliminate the cybersecurity risk posed by vendors. Option D is unrealistic because avoiding third-party services is often impractical in modern business operations. Question 20. Reputational damage and cyber insurance. Which of the following best describes how reputational damage is typically covered in a cyber insurance policy? A. Reputational damage is always covered in cyber insurance policies. B. Reputational damage is covered under a specific endorsement or add-on to a cyber insurance policy. C. Reputational damage is generally excluded from cyber insurance policies. D. Reputational damage is not relevant to cyber insurance and is only covered by general liability insurance. Answer B. Explanation. Reputational damage is typically not included in standard cyber insurance policies, but may be covered under specific endorsements or add-ons. Option B is correct because many policies offer endorsements that provide coverage for reputational damage often related to a breach or incident. Option A is incorrect because reputational damage is not automatically included in most policies. Option C is incorrect because reputational damage may be covered in some policies but typically requires an endorsement. Option D is incorrect because reputational damage due to a cyber incident would not be covered under general liability insurance. Question 21. Cyber insurance policy limits. Which of the following factors can influence the policy limit for a cyber insurance policy? A. The amount of revenue the business generates annually. B. The number of employees working at the company. C. The company's physical office locations. D. The company's social media presence. Answer A. Explanation. The policy limit for a cyber insurance policy is often influenced by the size of the business, particularly its revenue. Option A. Larger companies with higher revenue may be able to secure higher policy limits due to the greater potential financial loss from a cyber event. The number of employees. Option B. Office locations. Option C. And social media presence. Option D. Generally do not directly influence the policy limit. Question 22. Social engineering and cyber insurance. Which of the following is likely to be covered under a cyber insurance policy related to social engineering? A. The costs of repairing physical damage to office equipment caused by a cyber attack. B. Losses incurred from a phishing attack that tricks an employee into transferring funds. C. Reputational damage after a cyber attack on the company's website. D. Legal fees for defending against a lawsuit after an employee inadvertently disclosed sensitive information. Answer B. Explanation. Social engineering attacks such as phishing are often covered by cyber insurance. Option B is correct because phishing attacks that lead to financial losses are a common type of social engineering covered by cyber insurance policies. Option A pertains to physical damage, which is typically covered under property insurance. Option C concerns reputational damage, which may be covered under specific endorsements, but not as part of basic social engineering coverage. Option D involves legal fees, which may be covered by cyber liability insurance, but it does not directly pertain to social engineering. Question 23. Cyber liability for privacy breaches. Which of the following is most likely to be covered by a cyber insurance policy under privacy liability coverage? A. Loss of customer data due to physical theft of hardware. B. Cyber attacks causing a denial of service disruption. C. Privacy breach costs arising from a third-party vendor mishandling personal data. D. The cost of cybersecurity audits and updates following a data breach. Answer C. Explanation. Privacy liability coverage under a cyber insurance policy often covers breaches arising from third-party vendors mishandling personal data. Option C. This type of coverage addresses risks related to data privacy laws and regulations. Option A might be covered under property insurance, not cyber insurance. Option B covers business interruption due to cyber attacks but not specifically privacy issues. Option D is usually part of a company's internal cybersecurity expenses, not directly covered by privacy liability coverage. Question 24. Business continuity and cyber insurance. Which of the following best describes the role of business continuity planning in cyber insurance? A. It is a strategy that guarantees reimbursement for all damages after a cyber attack. B. It helps the business minimize financial losses during system downtime, which could be covered by business interruption insurance. C. It is an optional add-on to cyber insurance that covers all costs related to restoring systems. D. It is unrelated to cyber insurance and focuses purely on physical business operations. Answer B. Explanation. Business continuity planning helps a business minimize financial losses during system downtime caused by a cyber attack or other incidents. Option B is correct because it highlights how business continuity plans can reduce the financial impact on a company, which could be covered under business interruption insurance. Option A is incorrect because business continuity planning does not guarantee reimbursement for all damages. Option C is incorrect because it does not necessarily cover all costs of restoring systems. Option D is incorrect because business continuity is directly related to minimizing the impact of cyber incidents. Question 25. Regulatory compliance and cyber insurance. Which of the following statements about cyber insurance and regulatory compliance is correct? A. Cyber insurance covers fines imposed for failure to comply with data protection regulations. B. Cyber insurance automatically ensures compliance with data protection laws such as GDPR. C. Cyber insurance may provide coverage for the costs of regulatory investigations following a data breach. D. Cyber insurance only covers claims related to breaches of personal information, not regulatory non-compliance. Answer C. Explanation. Cyber insurance policies may provide coverage for the costs associated with regulatory investigations following a data breach. Option C. While policies may help with legal fees, they typically do not cover fines or penalties resulting from non-compliance. Option A is incorrect because cyber insurance typically does not cover fines. Option B is incorrect because insurance does not guarantee compliance with laws. Option D is incorrect because cyber insurance does cover breaches related to personal information but may also cover costs related to regulatory investigations. Question 26. Cyber insurance coverage for network security. Which of the following is typically covered under network security liability coverage in a cyber insurance policy? A. Costs related to physical security breaches such as theft of hardware. B. Financial losses due to unauthorized access to a company's network by an external hacker. C. Loss of intellectual property due to employee negligence. D. Reputational damage caused by a third-party vendor mishandling data. Answer B. Explanation. Network security liability coverage typically covers financial losses resulting from unauthorized access to a company's network, such as hacking incidents. Option B. Option A relates to physical security and would be covered under property insurance. Option C pertains to insider threats, which may be covered under other parts of the cyber insurance policy, but not specifically under network security coverage. Option D involves third-party vendor mishandling, which could fall under third-party liability coverage. Question 27. The role of cyber insurance in crisis management. Which of the following best describes how cyber insurance supports crisis management after a cyber attack? A. Cyber insurance provides immediate and direct compensation to victims of the breach. B. Cyber insurance offers access to crisis management experts, such as PR consultants and cybersecurity specialists. C. Cyber insurance eliminates the need for a company to implement an incident response plan. D. Cyber insurance guarantees a swift resolution to all cyber incidents, regardless of their severity. Answer B. Explanation. Cyber insurance often provides access to crisis management experts, such as PR consultants and cybersecurity specialists, to help manage the aftermath of a cyber attack. Option B. Option A is incorrect because cyber insurance does not provide direct compensation to victims. It covers the policyholder. Option C is incorrect because having a crisis management plan is still necessary. Insurance does not eliminate this need. Option D is incorrect because cyber insurance cannot guarantee a swift resolution, as the severity of the incident may impact the recovery time. Question 28. Claims made versus occurrence policies. Which of the following best describes the difference between a claims made and an occurrence cyber insurance policy? A. A claims made policy only covers incidents that are reported during the policy period, while an occurrence policy covers incidents that occur during the policy period, regardless of when the claim is made. B. A claims made policy covers incidents that occur during the policy period, regardless of when the claim is made, while an occurrence policy covers claims reported during the policy period. C. Both claims made and occurrence policies cover incidents that are reported during the policy period. D. Both claims made and occurrence policies provide coverage for cyber attacks that happen outside the policy period. Answer A. Explanation. A claims made policy covers incidents that are reported during the policy period, while an occurrence policy covers incidents that occur during the policy period, regardless of when the claim is made. Option A. Option B is incorrect because it reverses the coverage definitions of claims made and occurrence policies. Option C is incorrect because it does not distinguish between the two types of policies. Option D is incorrect because both policy types generally only cover incidents occurring within the policy period. Question 29. Ransomware and cyber insurance. Which of the following is likely to be covered under a standard cyber insurance policy in the event of a ransomware attack? A. Ransom payments made to cyber criminals. B. Lost profits due to business interruption during the attack. C. Payment for physical damage to office infrastructure. D. Legal costs for defending against ransomware attackers. Answer B. Explanation. A standard cyber insurance policy would typically cover business interruption losses. Option B. Caused by ransomware attacks that disrupt operations. Option A may or may not be covered, as many policies exclude ransom payments or have specific clauses regarding them. Option C pertains to physical damage, which would be covered under property insurance, not cyber insurance. Option D is incorrect because legal costs are not typically covered for defending against attackers, but may cover defense against lawsuits related to the breach. Question 30. Cyber insurance coverage for remote work risks. Which of the following best describes how cyber insurance can help mitigate the risks associated with remote work? A. Cyber insurance can cover the cost of upgrading employees' home office equipment to meet security standards. B. Cyber insurance can provide coverage for data breaches that occur due to unsecured home networks. C. Cyber insurance can eliminate the need for companies to implement cybersecurity protocols for remote workers. D. Cyber insurance automatically extends coverage to all remote work scenarios without additional considerations. Answer B. Explanation. Cyber insurance can provide coverage for data breaches and other incidents that occur due to unsecured home networks or remote work setups. Option B. Option A is incorrect because cyber insurance does not cover the cost of upgrading home office equipment. Option C is incorrect because cybersecurity protocols are still essential and insurance cannot eliminate the need for them. Option D is incorrect because remote work risks may require specific policy considerations or endorsements.